This is the Converge Podcast, brought to you by the Converge Institute. Each week, brilliant minds specializing in AI, blockchain, and fintech come together to challenge the status quo and empower disruption. Sponsored by our founding council, Nakusa, BankSocial, the Texas Blockchain Council, and the Universal AI University.
All right. Welcome, everybody, to the Converge Podcast, where ideas actually become reality. And today we have a very special guest, Caroline Willard. She is the CEO of Cornerstone Credit Union League. Welcome, Caroline.
Thank you, Becky.
So tell me a little bit about Cornerstone Credit Union League. Some of our listeners are not credit union folks, so kind of talk about the concept of this league. What is that?
Yeah, it's a term that I didn't know before I worked in the credit union industry, or movement, as we like to call it. And so it's a trade association, really, is what we are. And back in 1934, there were 50 state-level credit union associations that were formed. Some of them formed a few years later, but we've since done some consolidation. So now Cornerstone League has consolidated for other leagues. So we take care of advocacy, education, communication, and some for-profit services for credit unions in 5 states in the south central part of the country. Serve about 640-ish financial institutions, credit unions only.
Right. Very cool. I know that I've always been associated with a league regardless of the state that I was in. Mostly I've been here in Texas in the credit union space, but I was also in Nebraska for a period of time, and I volunteered to work on the board there in Nebraska. So that kind of gives folks an idea of what it is that we do. So let's kind of get right into it and let's talk about you and I, Caroline. How in the world did we meet? Do you remember?
I do remember. I mean, you were a member of our trade association. You were a dues-paying member, and in your role at Lone Star Credit Union, it was fun to get to know you and to get to see that you not only have a really strong technology background, but you have a way of thinking in a constructively disruptive manner, which I really enjoy.
Constructive disruption. I like that phrase.
Yeah, you're not trying to tear things down. You're just trying to look at them from maybe a different angle or a vantage point and improve upon what is happening. And I loved that you did that while you're still at the credit union. I love that you're continuing to disrupt and really help us all see a brighter future.
Well, thank you so much for that. I remember meeting you because, of course, there was a longtime CEO of the Cornerstone League that was retiring, and you came in and took his place. And you want to talk about disruption? That was disruptive because he had been there for a long, long time, and you came in from California and were kind of a fresh face, new to Texas, and came with a long history of credit union background, particularly in the marketing area. And so we just welcomed you, and you've been here. How long have you been with the league now?
It'll be 8 years in April. So yeah,
I was going to say 5 years. So time like flies.
It does go fast. And talk about disruption. You know, that a trade association in Texas hired a woman from California.
Right.
And I won't talk about political affiliations or anything, but there were a lot of raised eyebrows kind of wondering if I could pull this off and in what is now 5 red states. But the reality is that credit unions are not red, they're not blue, they're purple, because we serve people all across the political spectrum. I didn't talk much about our advocacy efforts, but as a trade association, you know, we run several political action committees or PACs, and so we raise money for political purposes. And, you know, across the country, if you average it out, credit unions give about 50% to Dems, 50% to ours. It's very apolitical. It's just about helping people of modest means, typically. but also providing an option in the financial services marketplace. So we do everything we can to make that possible, to make it better for credit unions to do business.
I think that's interesting because I don't know of many industries that are really bipartisan as much as credit unions are. I mean, you just mentioned both sides of the aisle, and that is absolutely true. And many times when we have to go to state legislators or to the federal legislators in Congress on Capitol Hill, we see there's a lot of support on both sides. And it's actually kind of rare to get any sort of partisan. I mean, there might be specific topics that get partisan support one way or the other, but for the most part, everybody kind of loves credit unions, right?
Yeah, that's absolutely true. And that's what I found to be so refreshing when I really dug into advocacy work. Because my prior job, as you know, I worked for a technology company that served credit unions, very different. And so to get into this kind of work, I had to learn quickly that what politicians care about is votes. Just to be blunt.
So really?
I mean, maybe that's a blinding flash of the obvious, but they care about that. And so, we can come in and say, Mr. Congressman, you've got 20,000 credit union members in your district. And here's what they care about. And here's why they want their credit union to be able to do X or Y or Z. And so advocating on their behalf becomes easy because, politicians, like during the pandemic, we were helping credit unions to give out PPP loans, Paycheck Protection Program loans. And, what elected official doesn't love that the local dry cleaner is staying alive because of a credit union?
Yeah, absolutely. Well, speaking about advocacy, the league got involved with the Texas Blockchain Council kind of early on. Talk to me a little bit about why you felt that was important and how that relationship has moved forward since then.
Yeah, well, it all comes about because of friendships, people I knew who were dabbling in different types of finance, who were dabbling in blockchain, who were dabbling in crypto. And so the league, our job is to make sure that credit unions don't get left behind in any regard. Open banking, you can name any number of trends. And so we were really impressed by what the Texas Blockchain Council does. I got to meet Lee Bratcher, and I thought, this guy really knows his stuff. And so yes, we've been supportive. I know they just introduced a bill so that the state treasury can accept Bitcoin. And our Governor Abbott has been receptive to these types of efforts. Some states are not. You'd be surprised at how some states are really kind of wary of what it means. We've got a sitting U.S. senator in Texas who's leery about a lot of these technologies. And so I love it that they are pushing and they're fighting to make something that some people see as being on the fringe. They're fighting to make it mainstream. So that makes me happy. And they're really good at it. So it's like we should just support what they do rather than reinvent the wheel.
Absolutely. And of course, we office here in Dallas with the Texas Blockchain Council, and Lee and his team do great work. And we kind of get to have a front row seat to some of the great things that they do. As a matter of fact, when that bill was about to be announced, Lee came down and talked to John and I in the office and was like, oh my gosh, this is about to happen. So whenever you see it, you'll know. And that's really exciting. And to your point, there are some states that already have announced that you will be able to pay for state services with cryptocurrency. Louisiana is one, our neighbor to the east. Pennsylvania has done some things. Michigan has done some things. It's really quite interesting. So it'll especially be interesting with this new federal administration that is coming in that is crypto friendly. And one of the statistics that I saw that's quite interesting, which you may be aware of, is every political candidate at the federal level that was pro crypto won their election.
Oh, I did not know that. That is a great statistic.
Yes. So that's really quite interesting as it relates to what the American people want and what they're voting for. Mm-hmm. So it will be intriguing to see what 2025 brings about in this space. So what other type of advocacy efforts do you guys work on at the Cornerstone League? What are some hot topics for 25?
Well, we are at a federal level and less so at the state level beginning to have concerns about the scrutiny over taxation, mostly at the federal level because of the size of the federal deficit. The government's going to be looking for a way to find new revenue. And one thing that credit unions have always enjoyed because of this nature of their charter, not because of some entitlement, but because credit unions are not-for-profit financial cooperatives, they've enjoyed an exemption on federal income tax. They still pay a lot of other taxes, but
property tax, sales tax. Oh yes.
Yeah, you know all about that. I mean, you had to pay those bills when you're running a credit union, and so you know that we as an industry do pay a lot of taxes, but we also know that in a year where there's a strong desire to get the deficit back under control, that they'll be looking for revenue sources. The amount of that tax exemption is in the low billions, right? So it's not going to solve our $2 trillion federal deficit. But we have to remain vigilant. So at the federal level, that is one of our biggest priorities. Credit card interchange is another fight we've been fighting. I feel like I should charge myself $1 every time I say the word interchange, and then put it in my retirement account. But I'm tired of the topic, if I'm honest. But it's not over. And, there are those in Congress, specifically those in the Senate, who've really been championing a way to reduce the amount of compensation that financial institutions get when a credit card is swiped. And by the way, that compensation, Becky, it pays for buying those cards, issuing those cards, fraud protection on those cards, all of that. And yet there's a desire to provide a haircut through interesting channels. But so we're pushing back against that. There's a lot that's happening in each of the states too. And a lot of times that comes down to fraud prevention as well, pushing some of the liability for fraud onto the parties that create it. So that's the high level view. We could talk for an hour about all of the things on our punch list for 2025, but I know that's not today's purpose.
Well, I think what's interesting is the interchange has to do with payments, and the industry that we're in here at BankSocial is kind of disrupting payments. Cryptocurrency is a disruption to traditional payments. It's kind of an additional payment rail, right? And it is less expensive than running on credit or debit rails. There's not that interchange income where everybody's coming in and getting a piece of it. And that is going to be very interesting to see. And now kind of going back to what we just talked about with some of the states accepting cryptocurrency, those things becoming more mainstream and people making payments with stablecoins, for example, is really going to change that landscape when it's just as easy to pay with my crypto with my digital wallet as opposed to my credit card that is in my Apple Wallet. Things might change a little bit, and maybe people won't be fighting so much about interchange whenever everybody's getting less anyway. So it'll be interesting to see what comes about. I don't know if you knew this either, but there's a statistic. A16Z Crypto did a kind of a state of crypto for quarter 2, 2024, and stablecoin dollars volume in stablecoin transactions in quarter 2 of 2024 exceeded Visa.
Wow. That's shocking.
Isn't
really?
it?
Is it because of the size of the transactions?
The the dollar amounts are larger in stablecoin so the number of transactions was higher for Visa, but the total volume in dollars was almost double in stablecoin for Q2.
Yeah, that's a fascinating statistic. And, I referenced my last job at the start of the call, and, so I did work in payments, and I remember the freak out that we had when Apple Pay got introduced, right? And we said, oh my gosh, tokenization, what does that really mean? Well, what it really means is a more secure transaction. And so, I have to believe that we are heading toward an era where transactions move more quickly, that we do have that chain of custody kind of thing that comes with blockchain, that comes with crypto. I like where it's headed. I would be lying if I didn't say I'm a big fan of cards as well because of their ubiquity and acceptance level. But everything evolves over time, so we've got to be watching. We've got to be ready.
We do. So that brings me to my next topic about empowering disruption and emerging technology, and how credit unions, you talked earlier about making sure that credit unions aren't left behind, that they're able to do things that are competitive and that other industries are able to participate in. And you guys advocate for that at the state level and at the federal level. But empowering disruption, how do you feel about credit unions and disruption, and how does the league help support that?
Well, credit unions are the original disruptors, because back 100 years ago, when people were putting money in cigar boxes, my personal credit union hero, not to get into a history lesson because we do need to be forward looking, but I think it's interesting that, not quite 190 years ago, there was a woman named Louise Herring who worked for Kroger grocery stores. No disparagement about Kroger, but back in the day, people who were employees of that grocery chain were borrowing money from the company, and it was at a really high rate of interest. And so this woman, Louise Herring, she's in her early 20s. She said, that doesn't feel right. And so she helped start a credit union for Kroger employees, and what a disruption that was, right? Because people finally had an affordable source of credit. She went on to found another 500 credit unions that were, most of them really teeny tiny credit unions. But so the idea of finding a better way for consumers is at least 90, more like 100 years old. And so I think this is in our DNA, is that we are going to be, we're not large institutions for the most part. And so we have the ability to innovate quickly. We have the ability to be intimate in a community. Oftentimes, the credit union is the only financial institution within a certain radius, and so there are. I've met with credit union CEOs who take $50 out of their pocket because somebody can't, get groceries that day. So, all of that sounds very homespun and nostalgic, and it is. But I also believe there are some credit unions who are testing things that are highly innovative. We've got some technology credit unions across the country. One that comes to mind right away is First Tech in Beaverton, Oregon, and Northern California, and they serve technology employees. So they've always had to be very progressive with a small p. I've learned to have to. So they're offering things that are faster forms of money movement, and relevant to how those members transact. So yes, I think that credit unions are the OG, right? They're the ones who knew how to innovate before it was cool. So I say all of that, and I also say that on the flip side is that we are regulated entities, and so it's up to people like Cornerstone, people who run trade associations, to help our regulators in particular understand how and why credit unions might want to use new technology. And you and I both know Kyle Hotman at NCUA. The guy gets it. Oh, yeah. He really does. He's a big fan of yours, by the way, and to have a regulator as a fan, it's not usually a compliment, but in this case, it's there.
Right. Not the kind of attention you usually want, right?
No, but he loves what you're doing. And I think he appreciates the fact that um, organizations, entities like yours are going to help credit unions embrace new technology and be more relevant. So I love it that we, not forever, but for now, we've got a regulator who gets that.
Yeah. I think that what's interesting is all of this stuff is coming out right now about what the banking industry, which includes all financial institutions, but mostly you saw this in the banks because of how the FDIC, the OCC, and the Fed came out with their stance on crypto. And a lot of people got debanked, right? Mark Anderson went on the Joe Rogan show talking about it. And what was amazing to me was what people didn't know about this, really. I mean, it was kind of like common knowledge. And it wasn't that banks were necessarily just kicking people out willy-nilly because somebody called them and told them to, but because it was kind of like a hot potato, similar to cannabis or other controversial banking relationships that a financial institution might have. But it was really, really hard for anybody with crypto in their name to get a bank account. And that is coming to light now. But the interesting thing is NCUA took a positive approach to that. And they mentioned DLT, which is a more broad term for blockchain, distributed ledger technology, Web3. And they basically said, which is kind of what you were talking about, hey, credit unions, do what's best for your members. You are all about serving the community, serving a particular niche, whether that be an employer niche, a geographical community niche, an educational niche, whatever it is. If your members are going to use this new technology or you feel like it's a better way to deliver products and services to them, then by all means, do it. Now, they never said don't bank or do bank these kinds of companies. Credit unions generally aren't commercial deposit institutions for the most part. So that wasn't that big of a deal, but it was the only regulator who took a more positive-ish approach to emerging technology. And Kyle Hoffman was part of that, which is really pretty cool.
Yeah, I loved that. And I think there are a lot of reasons a regulator could weigh in on that. For one, they get pressed, and they have to, because the transactions, the relationships are happening. And so they can't, that horse can't he can get out of the barn, but he can't get too far down the road before they start to rein him in. And that's the most Texas thing I think I've ever said. But so that's one reason they need to be engaged. But the second reason is that it can become a safety and soundness issue. If a category of institutions is not staying current, they are going to lose market share and they are going to not be as relevant. And so, I love it that our regulator, in that this is the prudential regulator, we have others, that regulator, NCUA, got that. And, that they're leaving room for it. It's still pretty fuzzy in the definition of how credit unions can serve and engage with decentralized finance, with Bitcoin, with whatever you're talking about in the moment. Yeah.
Yep. I think that it already, looking back on that was a historic moment for NCUA, and I'm really glad that they stuck their necks out there a little bit and took that stance. I think it's been helpful for our industry, and I think it will turn out historically to be a pretty major milestone for credit unions.
Yeah. And, I mentioned, okay, so NCUA is the prudential regulator and we have others. We have another 4-letter word out there, that, in a different regulator, CFPB. And, casting no aspersions, I'm sure I know, because I've met a lot of them, there are fine people working there. However, sure. The approach to protecting consumers can get really heavy-handed. And, a lot of times consumers, they want innovation. They want a faster way of doing business. They want to be able to transact how they want to do it, right? So So I worry that in the name of consumer financial protection, that there might be limitations. We've already seen it on ways that people can do their banking transactions. So we keep an eye on that. A huge disruptive force right now is, I'm sure you're aware that Supreme Court overturned the Chevron doctrine, which the lay way of describing that is that to this point, the legislators have left the interpretation of rules largely in the hands of regulators, and that has proven not to work very well. And so there's been a lightening of the burden of statute of limitations and ways that we can approach regulators and challenge them for maybe being a little heavy-handed or writing rules that haven't gone through a fair process. Mm-hmm. So we see that a lot. We see rules come down that are in the name of consumer financial protection, but in reality are a bit of a knee-jerk. And so overturning the Chevron doctrine opens up the door to legal challenges to that type of regulation. And I'm all for it, because I think we need to continue to create an environment that allows credit unions in particular and banks and other institutions in a larger sense to navigate all of this. This is tricky stuff. So it's not no regulation, it's just reasonable regulation is what we're looking for.
Right. Well, and John and I and all of us here at BankSocial believe that too about the crypto space. We believe that, in fact, many of the consumer protection financial regulations that are in place are applicable to this space, namely things like Reg Z. We're talking about decentralized finance and lending mechanisms, truth in savings, Reg DD, funds availability, Reg CC, electronic funds transfer, Reg E. Those things all should apply to the space. And there's ambiguity right now around, well, does it? Does it really apply? And so we kind of need someone to say, yes, it applies. I don't subscribe to the notion that we need all new regulations that just apply to the web-free space. We have plenty of regulations already that do what we need them to do. So let's just say, hey, they also apply over here. So all the things about disclosures and interest rate, information and, all of that, no, this is not an insured deposit. No, this isn't a regulated investment or whatever it is that people are doing. Consumers should be protected. And when bad things happen, and unfortunately sometimes that they do, or bad actors get involved, there should be a place for consumers to go to get help.
Sure.
And that is an area that is lacking right now in the crypto space at large. And I'm hoping for some clarity there here soon here in the United States.
Hearkening back to our friend Kyle Hoffman, I remember him saying, if I don't want to overregulate something that we don't even fully understand yet. And he was saying it in a generous way, right? He wants the innovation to happen. And he said, if the government had been involved in the creation of the internet, we'd still be back with green screens, right? He's a funny guy and he wants to see innovation happen. Having said that, he absolutely gets it that there have to be boundaries and there has to be a sense of safety and soundness in transactions as well. Consumers need to feel secure.
Absolutely. All right. I'm going to jump in finally to some personal information about you. I know that you travel internationally and you have been able to see some really cool credit union things in different parts of the world. What I love about credit unions is it is not an American institution. As a matter of fact, credit unions were founded in Germany originally, but it is a global phenomenon. Credit unions are all over the world in different iterations. There's different rules, but at the end of the day, they are all about helping people. And so give me a story or two about some of the things that you've seen that are interesting or maybe not what you expected.
Yeah, well, I just, by the way, just last month hit my 7th continent, and I got to go to Antarctica and look at penguins, which is amazing.
Wow.
Yeah, it was great. But my 6th continent, because I oftentimes there's a blend of personal and business. I stay over after a business trip. My 6th continent was a trip to Kenya and Tanzania, so I went to the African continent. And the purpose of the trip was to do a fundraiser for building an educational center for credit unions, or SACCOs, in Nairobi. And so we did a fundraiser, and the fundraiser was to climb Mount Kilimanjaro, kind of like a walkathon, only 6 days.
Oh my goodness.
Yeah. So that was the kind of the hub, or the centerpiece of the trip. But around that trip, we also taught some courses. We taught a development educator workshop, and we met with leaders from all over the African continent to talk about things like board governance, and the fact that in some African countries, the board is the one who sets the rates, and the board is very heavily involved in the operations of these institutions. And so we talked a bit about, kind of separation of church and state, if you will. But we also learned, there are some places on the African continent where, deposits are collected on the back of a moped. And to see the foundation or the principles of a credit union being carried out where people have so little is just really life-changing. That pooling or creating a financial cooperative for the greater good can work anywhere. And so that was great to get to understand that, to get to understand how they contribute to their communities. It absolutely changed my life. Maybe
that's amazing
what we have got. Yeah.
I met some SACCO folks, both employees of Kenyan, specifically credit unions, and board members. They came to visit Lone Star Credit Union a couple of years ago, and I got to interact with some of them, which was really amazing. One thing that was very interesting to me was how they do lending. And the way that works is if you want a loan, then you go to probably the board or some sort of committee, right? And you say, this is what I want to do. And you have to get a number of members to agree to loan you the money. So you kind of have to go canvass your community members, your other credit union members who own the institution, right? To say, I need, $1,000 to do this, that, and the other thing. And if you can get 3 or 4 to sign on to agree to lend you that money, then they grant you the loan. Yeah. And talking about what you said earlier with the cigar box and hearkening back to our historical roots, that is such a real example of people helping people. And I think that we forget sometimes here in the United States that how amazing that is to be able to provide that service to people.
Yeah, it really is. And they, to extend that thought,
it's such there's reciprocity in these trips when we get to go visit or when they come to us, because we talk them through the possibilities of a more systemized underwriting program, right? Instead of relying, a lot of times what you just described, there'll be a dozen or so wealthy people in a given community who offer personal guarantees on loans. And so the availability of credit is only as deep as those individuals' pockets. Mm-hmm. And so it's a limiting factor on the availability of credit. And so we talk to groups a lot about underwriting and how to maybe accept a little risk that doesn't involve a personal guarantee, because it's finite. In exchange, boy, did they teach us about payments, because you can't buy a bowl of fruit on the side of the road without using M-Pesa. Their electronic money movement, it's a mobile app. They're way ahead of us in that regard. So you learn and you teach at the same time.
I have a colleague of mine who his girlfriend is from Brazil. And in Brazil, they use Nubank, which is a very popular kind of fintech, soft bank, banking as a service platform in South America. And he says that the app that she uses for Nubank is like 100 times better than any of the digital banking apps that any financial institution has here in the States. And so sometimes getting away and getting out and seeing what other places are doing is definitely beneficial and eye-opening.
It's eye-opening and it's humbling, and it makes the world a little smaller.
Yeah. Okay. I'm going to ask you now to leave us with a thought. If you were to talk, Caroline, to your 25-year-old self, or even your 21-year-old self who was just getting started in their career, what would you say to her?
Oh, I think don't be so hard on yourself. I thought that I needed to be a CEO by this age, and I had all the goals, all the deadlines, all of the constraints, really. And you can paint with a broader paintbrush. And I wish I'd learned that earlier. I eventually got where I needed to get, but I think we have to give ourselves grace. That really every job, even if it doesn't feel like a step in the right direction, you learn something from every single job you have. And so experience enriches you in ways you don't maybe know right away. So take it easy on yourself. Know that you're learning every single day. And that's what I would tell my 25-year self.
Awesome. Well, thank you so much, Caroline, for visiting with me today. And I appreciate everything that you do with the League and for credit unions and for people in general. So thank you so much, Caroline.
Oh, thank you so much, Becky. It's always a pleasure.